Hello viewers, a very good morning. It's Isma as usual, back again from FX Kampala. In our YouTube video today, we're going to be looking at psychology. In other words, how do you master trading psychology? What is psychology? Is literally what we're going to be looking at in this video. If you haven't subscribed onto our YouTube channel, please do such that you enjoy the content that we release. You can also visit other social media platforms of ours, that is Instagram, Facebook, TikTok, Twitter. Just type in FX Kampala, you'll find such amazing information. By definition, without any wastage of time, let's get directly and see what is psychology. I believe most people think when it comes to forex trading, the psychology that ideally happens outside is what happens into the forex business. Now, that is wrong. In this video, we're technically going to understand what is trading psychology. What are some of its effects? What are we talking about when we talk of psychology? Now, by definition, trading psychology is the emotional and mental state that influence traders' decision in the market. It involves managing emotions like fear, greed, maintaining discipline, and making rational decisions. So when we talk of psychology, we are looking at the emotional and the mental states that influence traders when it comes to making decisions. We're looking at all the avenues. We're looking at all what happens before one decides that they should buy, they should sell, they should enter again, they should trade a particular currency pair, they shouldn't, and a lot more. So there is literally a lot that happens there, because at a time of entry, at the time of execution, there is a lot that influences a trader. Things to do with greed, fear, hope, indiscipline, and a lot more. So by psychology, this is what we mean. One is state of mind. Because if you have been following our YouTube videos, we have certainly said for anyone's success, psychology contributes 60% of one's success, or for them to succeed in their trading journey. So 60% is trading psychology. Then we come to risk management, whereby a big portion of risk management is also contributed by the psychology, by one's psychology. So discipline is also, or position sizing, which is risk management, is a component of trading psychology, as we're going to see in this video. So I'll make sure that I make this video informative and then precise with the interest of time. But then we'll also share the contacts in this video, such that if you certainly find any hindrance, find something that you've certainly not gotten very well from this particular video, to always contact us and be in position to help you. Now, with psychology, there is a lot, and we are basically looking at decision making. Before, the decision we're literally looking at is either to trade, to get back into the trade, to buy, to sell, where to put the stop loss, where to put the take profit, and a lot more. How many trades should I put? There is literally a lot to do with decision making. There are quite a number of things. There are quite a number of effects, influences that influence traders whenever they are to make any decisions when they are trading. So I hereby now start looking at some of the factors associated by trading psychology. Now, I'll start with greed and fear. Fear may cause premature exits and missed trades. So when one is associated with fear, they basically will close their trades because, of course, they are fearing of loss. They have fear of losing. Now, they will have to make early decisions to close their trades out because they are afraid of losses. They don't have to, they don't know that they should have this in them. They are not following their system as stipulated in their trading plan, which is a characteristic of a profitable trader. So fear and greed are actually contribute to one's failure. And the moment you are associated, you're influenced, you are a victim of fear and greed, trust me, you'll close your trades before they mature, which causes premature trades, and of course it will affect you at the end of the day. Then the other thing is, when you have greed, greed can lead to overtrading and excessive risking. Of course, this is self-explanatory. I don't want to go deep into this. Then the other one is patience and discipline. Now, At the moment you're not patient, you're definitely going to lose out. The same will happen. Some people are too patient to the point that they can't, rather they wait for high probability setups. So if your psychology is strong and you're patient, then you can highly wait for high quality trades. By highly quality trades, we're looking at a scenario whereby you have a strategy and your strategy is A, B, and C. Now, some people are impatient to that point that they will only wait for A and B and probably enter without a C. Now, this, of course, will come with a lot of effects. This will affect you in your overall, strategy, in your overall results as a trader, and in your overall trading career, you as a person who is trading. Then when, of course, I talked about risk management. Risk management as a component, of course, of trading psychology. Now, the moment you don't do your risk, you calculate your risk, then you are planning to fail. Every day, we don't plan to fail, but we fail to plan. So, the moment you actually fail to calculate your risk, then you are planning to fail, which is ideally going to affect you at the end of the day. It's a component of risk. It's a component of trading psychology. Now, this happens at a point of us making decisions into the market. Now, the question is going to be, before I buy, before I sell, how much money do I come into the market? But then if you are not so good with your risk, with your trading psychology, you will just certainly come in with any amount of money, and which will eventually affect you. But then with good trading psychology, you're following your plan, you have a good mindset, and of course, you know what to do because you have a strong mindset. That is, if you've watched such a video, that it will tell you that this is one of the contributors for one's success when they are trading, which is trading psychology. Rather than focusing on the trading system, trading methodology, trading style, trading strategy. Most people focus on the trading strategy, a holy grail into the market, which ideally is not gonna happen. Then there is actually a lot to do with trading psychology, but allow me mention, those most fundamentals, most important aspects of the trading psychology. Then is emotions. When we are trading, we should always have iron discipline. We should trade with our head, not with our heart. So we should avoid emotions because someone is so affectionate with a particular currency pair, then they would love to trade it even though it's not time to trade it, and a lot more. Stick to a trading plan despite the market fluctuations. So you stick to the trading plan even though your heart tells you that according to the way you see the charts, the way they are changing, you expect they show you that the market is going up, yet your strategy, your trading plan shows you that you should wait not until you have certain observations for you to buy. Now, these are some of the there are quite a number of them. We have headlining losses, mindset of success. Mindset of success is also another important thing. You should have a positive mindset the moment you start actually trading forex. Having a negative mindset is going to affect you. It's not only in the forex, but literally everywhere. So a positive mindset is very, very, very important. I believe I've spoken a lot, and of course, like I said earlier in this video, I'll be a bit precise, and time is not on my side. I've shared the contact like I said earlier. If you would love to get more details about this, if you want to have the excessive information about this, contact us, enroll for our courses, and you have such amazing information that will help you succeed in your trading journey. So with the interest of time, allow me to stop from here. Have a lovely day. Bye-bye.